Okay, welcome guys. Nice to have you guys here. I'm super excited to have this loads of number right here on the call. All right. So in today's Zoom meetings, just basically much about what happened all through the week. Yeah, we had this massive drop to the downside. So it's no news that I already have this one on the Telegram channel that I was telling everyone to go. I was trying to go bullish right here, which is what I have on my Telegram channel. So if you want to join the Telegram channel, the link is in the description box. You can join it on here. So this is where I hit the stop loss and also notified everyone. All right. So here was my entry at 4. Here's where I got entries. All right. So you all know how I trade. My first initial entries, I don't go all in aggressive. I go very conservative. It's when I finally find that the move is moving away in my favor. That's the reason why I stack. So this is the reason why I do all of that, because I really want to be very sure that I'm currently in line with the trend. I have to be very sure what I'm actually doing. So that's it on this one. So fast forward, I'll just go ahead. This is my chart. It's really messy because this is how I look at it. It's really messy right here. But what I do basically, I want to clean up a chart and take you through the weekly recap, show you how I look at trade from the beginning of the week up until the end. So today is Friday. That's why I'm doing this. So I'm just going to go ahead to take it to GBP USD on Oanda. So if you're the one drawing these lines on the screen, please kindly stop that. I've got no idea where that is coming from. Let me try to disable drawing for everyone. All right, so please kindly stop that. I've got no idea. And if you're unable to join in on here, I'll recommend you go straight to the YouTube channel to go join in. For those one, like the lines still keep coming. How do I disable join? Okay, I think that's solved. So here on GBP USD, it's a very plain chart. We also have price moved all the way through. So the first thing I do for the week is I go on the 4-hour time frame to map out high and the low of the week. This is a plain chart, just as everyone have it on their trading view. All right. So what I do is I go on the 4-hour time frame to map out high and the low for the week. So that in doing that, first step is I go on the 4-hour time frame. Then I'm to note the first 2 4-hour candles to form for the week. So in order for me to do that, I have to click the settings button. That's double clicking on your Mac. If you're on PC, you want to right click, then you have this settings button, navigate to appearance, and you toggle on the session breaks icon. So you should have this grid right here, this horizontal grid, this vertical grid. All right. So this is, each box represents daily action. So this is the action for Friday. This is Thursday, this is Wednesday, this Tuesday, and this is Monday. So the first 2 4-hour candles to form for the week is our target, our main point. So this is the first candle, the lowest. We are going to mark the lowest point, either of them, the lowest and the highest point of either of these 2 candles. So this is the lowest point of either of them, and this is the highest point of either of them. So this is our main focus candle. I'm sure we are following along. So this is the first candle. All right. Why this is the second? That is what we do on Monday. That is the job. So on Monday, we have to determine the trend. That's just the major job. So now we've been able to spot the high. So hence this point is the high of the week. So this point is the low of the week. So the next thing to determine is we have to wait for the next candle to either break up or beneath. So the first 4-hour candle to break up or down, that is the directional candle, the candle that determines the direction for the week that we have to follow up on. So the candle to first break up for the week happens to be this one. So this is the directional candle for the week. All right. That's speaking from the whole the ideology of this particular strategy, which I already shared. Okay. But there are some exceptions to this that could happen, which happened this last week. There are times that this could actually be a fake out to the upside. All right. This would actually be a fake out to the upside, but it's not going to last. And we have the second one breaking to the downside. So this, based on the ideology, what I just explained, this is supposed, this one right here is supposed to be the decision candle, but this happened to be the decision candle because this is actually a fake out. Why? Immediately upon this breakout, it got returned immediately by this huge, strong, bearish candle. So we have this as the directional candle for the week. So hence, we should be anticipating more of sales for the week. So that is this one for directional trade. So if you want to know more about this strategy, this principle I just explained, check my previous video on how to spot the high and low of the week. All right. So with that said, let me move to the next stage. So the next stage I'm going to do is to spot out my trend lines. So the first thing is I start on the 4-hour time frame to determine the trend line. So basically, looking at this trend, we have been dropping, shortening on GBP/USD in a long time. All right. But on 4-hour perspective, let's like about 2 to 3 weeks back now, we have been long. That's because from here point to this point, we are not to look at this huge move here on 4-hour time frame. Yeah, in a bigger time frame, it does matter. I have this one, you have this big trend line here, even on my FXCM, you guys have already noticed. So let me deactivate this session break so the chart doesn't look so messy. All right. So we have this huge move coming off all the way from this side up onto this point. All right. So but for the past 2 to 3 weeks or 4 weeks now, yeah, we've been having an uptrending market because we are having consecutive higher highs, higher low, higher highs, and higher low, which is supposed to happen right here. Okay. But however, this is also another point of view. This is a first touch, this is a second touch, and this is a third touch. And in trendline trading, yeah, we all know that in trendline trading, we are always, most times we have 3 touches on top of the trend line, on the trend line. Yeah. After that, we have a breakout to the upside, okay, or to the downside, depending on where it's coming from. But this one, we should, since we already have second touch right here, this is third touch. So we should be anticipating a bust to the upside in no time. Okay. So this was the view for last week. I had this trend line, all along. This is a trough. Here is a trough right here. Then it's a valid trend line. In plotting a trend line, all you need to have at least 2 valid trough or peaks, depending on where you're coming from. You only need 2 valid trough or peak, depending on where you're coming from. So this is a trough right here. We've got this trough right here. Is a trough. All right, here's a trough. So hence is a valid trend line. So we just try making sure it's touching the week right here, and we just extend out. So later in the future, it's whenever price gets here, whenever it breaks here, yeah, that's considered as a breakout. And whenever it comes back to touch this trend line again, it's considered as a retest. So that is what happens. So probably just say, okay, this was like a breakout, retested at this point, then it dropped. Okay, so that's on the 4-hour time frame. So let's take it a step further down to the smaller time frame. I'll just keep it simple. And there's what we call trend line relevancy. A trend line is considered irrelevant if price has already moved. For example, there is a trend line right here. There should be a trend line right here. There's a trend line right here when price was here. But at the time of making this video, it is very irrelevant because it does not have anything to do with where price is currently. So hence this trend line is relevant. So that's why we don't even bother ourselves plotting this trend line. However, you may see this on my other videos. Maybe you may see it on my FXCM because that's my main playing ground where I do my major analysis. So I don't really bother taking it out. But for you to have a clean and nicer chart, it is very, very important you take it out. So these are currently the most important trend lines that we've got on 4-hour time frame. So the reason why I'm using 4-hour time frame, 1-hour time frame, 15 time frame, that's because I'm a day trader. So in bringing this down, we have other trend line, which I had here. Here is a trough. Here's a trough. So we just elongate this out too. So that was how I was anticipating a buy right at this point. Okay. So for the whole week, I've got, that's what we just have on 15 minutes time frame. So this is for that confirmed when price was here, I short this point, but I stopped, I hopped out at this point. Why did I short from here? I had a short entry from on this point, yeah, but I hopped out at this point. So here are the reasons why I short. Number one, we've got a trend line retest at this point, 1. And number 2, we've got high of the week close by, that's 2. And number 3, there's a psychological level close by at this point, psychological level close by. So that's another concept I believe you all will hear me talk about, discuss majorly most of the time. So psychological levels are just basically round up numbers. I just drop it down here. That's 1.38000000. That's the psychological level. So that's how I get it. So you see, there's a psychological level around there. So that's the reason why I short at this point. So whenever I'm shorting a trade, which this is a habit that I want you all to have, whenever I'm shorting a trade, I must have at least 3 confluences confirming the direction. Okay, 3 confluences confirming the directional bias before I go short. So I don't just go short based on just mere emotions. All right. So I'm going short because there are 3 reasons, at least 3 for me to go short. All right. Like today, why I went long at that point, I'm going to also explain the reasons I had before going long. And also this part doesn't really look so messy right now. So let me go ahead and delete some things so that the chart can look so clean as best as possible. Yeah. So we have psychological level right there. That's one condition why I short at this point. Psychological level right there, one. Trend line right there, two. Low high of the week, three. So what price does whenever I get to high of the week, that's mean there's going to be a reaction around that point. Three. And fourth thing, we've got an M pattern right here, M pattern. I know what an M pattern does on GBP. Each time you see an M pattern anywhere in GBP or W is the inverse of an M. There's always a reversal. Anywhere you see that. Like this is an M. This is an M. What happened? Down to the downside. This is a W. W is to go long. Then to the upside. Like anywhere you see this is a W. This is a W. Like that. Yeah, minor. Anywhere you see that is always a sign that price about to go short or to go long. So we had four confluences at this point to go short. So I believe that's why this short option is really, really massive at this point. But I never saw this coming as a long-term short. Okay, that simply means GBP, as at this point, pound is really short against the United States dollar. All right. And we also had news at some point. There was a news event that was released. So you already know I'm a pure technical trader. I don't really look at news events. Yeah. I believe if my technical analysis is correct, then news is there to corroborate my position. That's just my major belief. All right. I don't know what you guys think about that, but that's what I do. I've been using this for the past 4 years and it's been working. All right. I don't really look at news. I just do my normal trading with my technical analysis knowledge. All right. And one thing that is really important again is discipline to wait. There's a video I'm currently making talking about FOMO, fear of missing out, and how to eliminate that. FOMO is, let me give an example of FOMO. Maybe you've got let me take you to my current, now you understand the state of things right there. So you should better understand my current chart. So on this plain chart, I drew all of these things in your presence. So let me take you to my actual chart. So this is my actual chart where I map out things. I don't delete anything right here. You see the trend lines that I've drawn for weeks are still there. Like I've got all these trend lines right there that I had them there. So it's just like my playing ground. So don't judge me about the messiness of this. I understand everything right here. Okay. So anytime I pull this box, that simply means that's my area of entry. So I had an area of entry at this point. This happened on Wednesday when I was live in firepipsfx.com class with the mentors. And here's another disclaimer. I don't really want anybody to get scammed. I'm not going to sell anything to you. I'm not going to request money from you through BTC. Do not send me money or anyone trying to claim to be Jeffrey Benson out there. Please do not do that. So, of course, I learned some people are actually getting scammed using my name. All right. These are fraudulent guys. I won't ask you for money. Do not send me money. I mean, it doesn't make sense. I'm a trader, profitable. So why should I ask you to give me $100, $200 or what? So it doesn't really make sense. So do not send me money. That's that on disclaimer. All right. Guys, be safe. So I've got this box right here. So when price got in here, I was expected to go short, but I didn't go short. But my mentees, like right there, they went short. Most of them are all in here in this chat, in this class. They are as well listening. So I actually do my entries on 15 minutes. So let me take it to 15 minutes. So where it's going to make a lot of sense. So why do I do it on 15 minutes? Because on 15 minutes, the patterns, the M patterns and W patterns makes a lot of sense to me. Yeah, it's more pronounced. Like you can already see, we've got like an M right here. It's very well pronounced. All right. We've got another M right here, but I didn't get in on this one. I remember I'm trying to talk about FOMO. We've got another M right here. Like there are many M's on 15 minutes time frame. So I call this one that's close of London / when close of London session and when the New York was still in session. All right. So that's when I caught this one. Now here's what I mean by FOMO. Now let's say, for example, you've got an analysis that whenever price got into this box, you're going to go short. And let's say you missed out on this. And price was already here when you caught it. FOMO is, oh, I already missed out of that. Price already touched my box and I'm not getting in here. So let me just get in here since I'm sure that price is going to drop. That's a late entry. Why? Because whenever this guy right here, this bullish kind of moves up, that creates panic, fear in your heart. And you start thinking, oh, I was wrong. And that is what we don't want you to have. We want to get in at a very nice price. Or let's say, for example, you got in at this point when this M was about to form, and you already felt, oh, price has already moved past, it didn't get to my box. So let me just get in at this point in order for me to catch the move. I don't want to miss out on the move. What happened right here when this price reverses to this point? Dang, it would have probably, maybe your stop loss was secured at this point. Probably have just erased out your stop loss from here. And you feel your analysis is wrong. No, that was just fear of missing out. That just happened right there. So you really have to trust your analysis, trust the process, and wait for price to come hit your box before you leave the chart. Like before, do not just hop on a trade because you feel it has already left. Markets, most of the time, will always give you 3 opportunities for you to get in. Like here was one opportunity right here. Here's the second opportunity to get in. And here was the third opportunity. Look at any major move. Market will always give you 3 opportunities. So I don't really see reasons why you should be having FOMO. Like here's an opportunity to get in. Here's an opportunity. Where is that? We've got an opportunity right here to get in. The one I got in the morning. Here's another one again to get in. And we also have another one right here to get in. So there are always 3 opportunities, 3 to 4 opportunities before market finally pushes to the downside. But one thing I want you to know, to take away from this class is, do not get in when the market, let's say, for example, you want to sell, you want to short, yeah? Don't get in when the market is in a strong short position like here. Maybe whenever you're seeing this huge candle drop, you are selling. That's a wrong way of entry. That's a wrong entry. You jump in when market is about reversing, when it's about reversing. Now, how do you know when it's about reversing? When it's about to reverse. You can do that with the help of Fibonacci retracements. I think I should get rid of this one. You can achieve that with the help of Fibonacci retracement. Like just pick up these 2 right here, Fib level, right here, Fib retracement, and put in, if it's for a short, Fib level is always going from the left-hand side to the right-hand side. And it's always from the recent high to the recent low. So you're just going to tap right here, take it to recent low, and you have to look out for 618 or 50% or 38.2. So we have, let me zoom one more. Let me zoom really in. This is 0.382. This is 50%, and this is 618. So these are the levels that you should be looking out for where price really holds. So that's one way to get a retracement, to know, okay, the next best point to get in. That's if you miss the first entry. I believe that makes sense in today's class. So I really want to be taking, I really want to be taking in questions. So if you've got questions, just drop that in the chat box for those in the Zoom, and for those on YouTube, drop that too on YouTube live chat. I'm going to take some of these questions. So I had this trade for the week. Yeah, I didn't get in on this one, but I was able to catch this one. All right. So FOMO almost made me to get in right here. So if I'd gotten right here, right here, I believe this spike would have probably taken my break even out or something. All right. Okay. So I was really, really patient. This one thing I learned for this week. Every week always come with different lesson. So if your chart is not teaching you a different lesson every week, man, you had better stop taking your eyes off the dollar and start learning, because the more you learn from the market, yeah, the more money you are set to make from the market in the long run. Okay. So this is what I learned this week on how to eliminate FOMO, and it really did work well. So this one we're just hunts to the upside. This is a hunt. This also was a hunt. Anything above this red level, this red line, were all hunts. So this week is actually meant to be more of sell. But we had it more of consolidation. It's consolidated more, and this just further confirms the market theory that market consolidates more than it trends. It consolidates 70% of the time, and it trends less than 30% of the time. Okay, so that's the theory. This is basically I just trade. It's very simple, and some people can just add. I don't care what you do, how you trade. I don't judge you, whether you're using your trend line, whether you're using moving averages, or you're using RSI, you're using TDIs or whatsoever, or you're trading smart money, or what's it called, or ICT, anything. I just believe that what's really important is you are using proper risk management. Just imagine I wasn't on this trade and my stop wasn't at this level. Here was my stop. My stop was right here. I had this trade long. I had my opportunity. I got in right here. And I'm going to explain why I got in right there. And my stop loss was right here. So I got stopped out, and my target was like for price to come in here. So this like 1 to more than 10, 1 to 10. That was like more than 5, 1 to 5. That was targeting at this point. So why was I looking to go long at this point? Number one, we've got low of the week. I was actually anticipating that this week is just going to be like consolidation, moving up to the high of the week, coming down to the low of the week, moving up. That was what I thought it was. All right. So this is low of the week. There's a psychological level right there. So the last thing I was waiting for was, what's it called? W pattern. So I thought this was the first leg. Okay. And it moved up right here. So I was anticipating another drop, and from here, bang, like what just happened, what happened right here too. You'll notice something similar happened right here, like the drop right here, went up here, formed this one, and we had a spike down to the upside. So that was what I was anticipating to drop right here. Because this one did not work, doesn't mean it doesn't work. Yes, it works crazily. It still does work. Market does behave this way. And moreover, there was news release at this point that forced price to come down. So from next week, we don't really know what we are going to do. How I approach the market is, if X, Y happen, I'm going to do Z. If A, B happens, I'll do C. That's how I approach the market. And I also want you guys to pretty much be doing the same thing. Don't, I believe predicting price is overrated. What is underrated is reacting when price acts. Like this one, how am I going to react from next week? If we probably have a retracement up until this point, yeah, and I see a real move from this side point to go long, short, I'll join the lead. I'll start shorting from that point. So that's what that's how I look at market. So that's the breakdown for this week. That's what happened in general. Okay, like the beginning of this week, let me just talk on the beginning of this week. It was a lot more choppy. We have market price moving to the high, coming to the low, moving to the high, and finally moving to the high and trying to come back down, finally breaking the top, overextended, coming back to the range again. So that's what basically happened. So the major moves started happening on Wednesday. I also called this move on Tuesday. I remember. Yeah, I called this move on Tuesday. So why did I catch this move? That will be the next question. I caught this one upon this spike to the upside because this was really on. I never expected this spike. Upon this spike, I saw this rejection, correction at this point, and just know it's coming back to range. So I went short at this point. Why? There's a psychological level right there, 1.38000. Okay, and I saw an M pattern right here too, an M. Let me spell that out. An M pattern. Dang. So that's why I went short. So there were two conferences right there that I saw, and it was close to the high of the week too. This is psychological level. So there were apparently three things I saw. So before I get into any trade, since I'm a pure technical trader, I have my plan that I follow anytime. Even though it's wrong, I still follow it. Okay, that's the way to think as a trader. Even though it's wrong, I still follow it. All right, so let me take a few questions that are popping up right here. What is the entry time frame? The entry time frame is spelled out right here. This is 15 minutes time frame. Here, right here, it's clearly written there. Okay, you need more on the fib levels. Please talk more about it. Okay, I'm going to talk more about it on the fib level right now. How do I identify psychological level? Okay, I'm going to talk about that. How do you start your trade? I'm going to talk about that. Okay, let me treat all these ones first. So first, I'm going to be talking about fib levels. Okay, on fib level, how to draw a good professional Fibonacci is here are the outlines. Always know that Fibonacci is used in a trending market. Note that first. Fibonacci is used in a trending market, and Fibonacci is always coming from your left-hand side to your right-hand side. Left hand. Okay, and the third thing is it is always from the recent swing high to recent swing low, or recent swing low to the recent swing high. Let's say swing high to swing low, and vice versa. All right, so recent. Oh, this is really important. Recent. It has to be recent. So these are the three things to know a trend, and you have to look out for. Yeah, let me put the levels you have to look out for. The levels that are really important you have to look out for is 38.382, 50, and 618. 618. So these are the levels that you should be checking out for. Okay, as for Fibonacci. All right, so let's go. Let me just give you like an example on how Fibonacci work. Now, already we know this is an uptrending market from on this point, an uptrending market. Why? Because first we have to know it's a trending market. So how do we know an uptrending market? When we are having consecutive highs, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So it is to know where is the nearest point where price will likely get to and start reversing in our desired trend. All right. So what you just need to do in this kind of in this situation is to pull up a Fibonacci. You just have to come to these two right here on Trading View. Click on this one. Click on Fibonacci retracement. So you want to use the recent low from this point here. So let me zoom on in for the benefit of those who are on phone. So this is a low. This is a recent low right here. We are fulfilling the second rule right here. So we already fulfilled this one in a trend. We have identified the trending market. So it's an uptrending market. So we are moving from the left-hand side to the right-hand side to this high. Okay. So this is also fulfilled. Swing recent high to swing low. That's vice versa. So this is a low. So this is for recent high to low. This is for a sell market. But if it's a buy market, so you have to be from recent low to recent high. So we also fulfill this one. So the levels we are looking at for is either 38.2 or 50 or 618. So let's go ahead and do that. Sorry, let me expand this point. Okay. Just a second. So we'll go it at that high. This is the high right here. So what for us to know the next point where price is going to continue to the upside here is at this point. So price actually it formed a W here on 618. This is the 618 level right here. Let me spot these levels that I said you should pay attention to. So this is 618 right here, 618. This is 50, and this is 38.2. So you notice when price got to 618, although we had more than extension out of that, it came to test 0.786. Yeah, before it finally leave. But apparently, I don't look at this one. I just look at for 618, 50, and 38.2. That's how I use the fib levels. Okay, it's more accurate that way. Yeah. So that's that on fib level. So I believe that brings clarity that you're asking. So you can just keep on doing your back testing and see how well it works for you, because it does really work. And make sure you stick to levels that you know has been working over time for you. All right. So the next question I got here was, so the guy talked about how to identify psychological level. I've made a video on this. You want to check how to identify key levels. You want to check that out. All right. But basically psychological levels are random numbers that banks hedges, they pay attention to them. Like all these blue horizontal line like you see on my chart, they are psychological levels. So you notice from on here, we've got 1.39000. So it's like having a random number, a whole number, buying at a whole number, or a price that makes sense. Like 1.38500, 1.3800. So the difference between this one and this one is 50 pips. So all you just need to do is to bring out your calculator, move from here, that's pips calculator, move from here to here. Once you have finally gotten a random number, it has to be 50 pips. So you notice how it is 50 pips in the box. So that's how to spot psychological. So it is 50, it has to be 50 pips. It has to be 50 pips. The distance from one to the other one has to be 50 pips. So I believe I've answered that too. You have to watch up that video in order for you to be really sure. And how do you stack your trades? Yeah, I stack my trades. I really do this practically when I'm live in live session. So if you want to really learn that, you're really serious about it, go on my website, firepipsfx.com, and join the mentorship. That's firepipsfx.com. And when you're signing up, make sure you use FirePip in order for you to get 5% off. Use the word FirePip as your coupon code to get 5% off. Okay, so when you come in here, yeah, on the mentorship, what this is where we just do live trading. Yeah, we do live trading, check you one-on-one. It's not like the normal mentorship you get out there that we just do a live recorded stuff and you watch it. No, that is free in the website. Also, if you're a new beginner, if you're a beginner and you're an advanced trader or you're an intermediate trader, you're lost, you don't really know where to navigate your way around in trading, yeah, you can just come on to Fire Pips FX and start learning for free. So what does the mentorship do for you? The mentorship is to take you by the hand and show you word for word how I actually do trade in practical. Okay, and also to monitor you to see what you are currently doing each day here every time. So we have live recording that you can as well check out. Like here, we've got the live recorded version. So for those who are just coming in, you're not going to miss out on what we've done previously. So here are the recording for every Wednesday. Okay, that's that on that. So let's go back to how the stacking works. So in the stacking, you really need a live. What I'm talking about, that stacking is related to the mentorship, because it's not a one-time thing. It's not a one-time thing. You really have to learn it, yeah, and then it's just become a part of you over time, yeah, become a part of you. Like there's a way we split risk. Like I split risk my percentage. Let's say on FTMO account, I'm trading on my Forex fund. I split it into three. Yeah, if I'm to risk 0.5%, so I'm going to do 0.5% divided by 3. All right. So I'm taking one portion. I stack it out first. So if the trade is successful, like when this one wasn't successful, hit my stop loss, then I'm not trading. I'm locked out. But if it was successful, let's say we had like a very nice push. We had a nice push from here to the upside. Yeah, I'm going to go crazy at this point. I'll put in my first risk right here, second portion of the risk, and I'll put my third one. So it moves like, even I explain to you right now, you probably may not be able to effectively apply. All right. So that's why you really have to be saying daily actions, doing it, trying by error and all of that. So why it's really important is if you master the act of stacking, you'll be able to grow small account very efficiently and easily. Okay. Okay. How do you stack your trade? Okay. Oh my God, this guy's so funny. You just want to see my face. Man, thank you, man. Thank you. Daily price for yesterday was a strong daily bullish engulfing kind of really surprised by the rollover. Exactly. I'm also surprised by that too. How do you make your chart this clean? Oh, thank you, my brother. Thank you. I just looking at the major things, putting only the things that are very important. Do you wait for the second leg of M to form before you enter trade? Yes, I wait for the second leg actually. All right. For those who want me to go over high and low of the week, again, just go watch the video on a later date and you will get that all result. So thank you guys for coming on today's call. So let me take some questions on YouTube. My YouTuber. So if you're new on YouTube, please can you just subscribe? Yeah, leave a subscribe button. I really care about this YouTube community. I'm still going to be dropping new content that are coming. How do you identify circulation levels? That's from Ashanti Jefferson. Thank you. I believe I've answered that already. Hello, Jeffrey. How many trades do you take in a day? Sometimes it depends. If the trade goes well in my favor, yeah, I can do stacks of up onto 20, 30, depending on the account I'm trading. But if it's an FTMO account, I'm very conservative with it. I just do 5 to 10. Okay. That's because most time I always set to use 0.5, one standard, and nothing more than 2.5. Okay. That's what I do. That's the main trades I take in a day. All right. Jeff, please, can an intraday trader hold a position till the next day? If you're yes, you can. If you're an intraday trader, you can do that if you feel the analysis is still very intact and valid. All right. Just how you find high and low of the day. I think I've done that already. There's high and low of the week. That's what I look over. And my YouTube community, I feel there are a lot of people right here already getting their questions answered. Okay, show high and low of the day, please. High and low of the day, please. Okay, this is spam. How much do you charge for mentorship? Oh my God. On the mentorship, I think I should show it. It's just $400. It's quarterly. It's not monthly thing. You don't have to be paying over and over again. I'm to take you until you are consistent, you are okay. And I'm sure that, okay, yes, you are okay. That's the goal. It's not to start making you to charging you over and over again. It's just one time thing, one time. And it's for 3 months that I'm to take you. And within that 3 months, you should be good. That's all you would ever need. You don't need more. You don't need more, because for me to master this thing took me a long time. So I have to look for a shorter means to make sure my mentees get it correctly. All right. So that's all you would ever need. All right. So I believe, hello Jeffrey, I removed you from the Telegram channel after I posted. Kindly add me back to the channel. Maybe you probably spammed the Telegram channel, because normally none of the admins is going to remove you without spamming. The time for the Wednesday live session is always 8 a.m. London. So we trade London sometimes up until opening of New York session. So that's basically much it. Okay. Thank you. How to control FOMO? Yeah. LPK is asking on YouTube how to control FOMO. You have to create a plan. That's the best way to do it. Create a trading plan that you're going to follow religiously. So whenever X and like you saw how the way this one happened today, like this is not just me telling you what I do. This is me showing you live practical example. I called this trade on Telegram right here that I was to go. Okay, just so that before we won't get there, I called this trade that price, whenever price is going to get here, waiting for price to form a W here, and I will long. That was my plan, even before price got there. All right, that's the plan. So with this plan, whether it works or it doesn't work, price has to get to this box before I'm going to take action. All right, you have to get to this box, not just get to the box, form a W, or trying to form a W before I take any action. All right, so that's what you see later on, like right here. That's how I just eliminate FOMO. So when it was here, I still wasn't taking action. I was waiting because I was waiting for this price to push up, come back down, yeah, and form W. Then I'm going to take action, right? So here was where I started notifying you. I said, yes, we got in at that level. This is where we got in this entry level because we already have a flash to the upside. This is first leg, flash to the upside, and this is second leg. On the second leg, that's when we get in on the W. It's a risky entry. That's why I got sniper entries too. The risky entry, but it works most of the time. So I got in right here, putting my stop loss right here. This stop loss was just 11 to 12 pips stop. So it doesn't really hurt. If we are correct, we are going to make crazy amount of money. That trade, I was anticipating to make like $12,000. But when I was wrong, I only lost, I think, less than $600. So risking $600 to make like $12,000. Why did that $12,000 come? I stack. Okay, that's the other guy asking about stacking. I just stack. If there goes on my favor, I add multiple position and increase my loss size and keep breaking even. That's the style that I use. So you notice when price got here, yeah, I went when price got here, it went up, came back down, touching here. From here, I went long. So I was waiting for price to move, but it didn't move. It killed me here. So there's nothing like FOMO here. One thing you also identify, you really want to know about trading is trading. You can still do the right thing and still make losses. That's one thing you have to identify. You can do the right thing. Your analysis will be right. You do the right thing. You follow all your trading rules, and you still make losses. So it is doing the right thing is not always proportional to profit. You have to know that. But over time, the long run, it is the best way for you to actually approach the market. So that's where psychology part also comes in, right? Because you can't always win all trades, even though you follow your analysis, your rules, and everything. You're not having FOMO. You're not having fear. You can't always win all trades, all right? So you always have to know that too. Stick to the plan, even though it is working or it's not working. It still makes sense to stick to your plan. So that's where profitable traders come in. All right. Currently on my Forex fund account, how much is it $4 equivalent to in Naira? Now I'm not sure of that, depending on the exchange rate that you're using. All right. I'm not sure. I believe bank rates is always very, very cheaper out there. If you want to buy, how much is $1 to? Nah, I'm not sure. I'm not sure about that. All right, thank you guys for coming on board. I really appreciate you guys. So if you find value in what I'm teaching right here on YouTube, you want to go ahead and smash the like button. And if you find it also very helpful and you want to be a part of the community, we love you. We're welcoming you. Join us. Okay, we currently have a team of about 38K subscribers. So join us. We are more than glad to have you. And if you want to join us on Telegram to join the conversation team, link is in the description box. Click on that link at Fire Pips Signal on Telegram and join us. Please make sure you don't join the fake one. But there are a lot of people out there that are creating fake accounts. Please join the right one and be good. All right, guys. See you guys on the brighter side, and bye for now. Bye for now, guys.